Hey everyone, it's great to be back here. Today I have an awesome guest.
Paget Stanco, the director of Gemini Institutional, leading efforts to deliver institutional-grade crypto custody and infrastructure for firms operating across digital markets.
The question really has shifted this year from should we invest in this asset class to how should we invest in this asset class?
Tell me about spending dollars and earn sats. How do you guys see that strategically?
The Gemini credit card is really mainstream on-ramp. It works in terms of instant rewards, so you are able to spend and use that credit card as you normally would to pay for your gas, buy dinner with friends, and be able to earn Bitcoin or any of the other assets we support on that everyday spending. It's super simple, it's regulated, and you're getting crypto. How awesome.
Well, what is the right structure for us? Is it the US model? Is it the El Salvadorian model?
El Salvador leaning fully in and being the first to adopt Bitcoin as legal tender. I don't think we will see that across some of the more major countries and cities that we're all familiar with. But that's my personal view.
I hope you're wrong, by the way, but we'll see. Hey everyone, it's great to be back here. Today I have an awesome guest. Paget runs the institutional side of Gemini, one of the most well-known exchanges in the world. Who's had a huge impact, I think on being Bitcoin and on-chain solutions to the institutional world. So stoked to be with you, Paget. It's awesome. Thanks for being here.
Yeah, thanks for having me, Jeremy. I'm excited.
You and I have gotten to know each other for a while now, but I think what's really interesting about the work you do is, I believe there's like a crossing of the chasm moment that's happened over the last year where you and I have been in the space quite a long time. But it wasn't until about a year ago that I felt it was kind of kosher to talk to sort of larger entities, larger institutions, policymakers, really about like what are the Bitcoin, what are the ETFs, what are the opportunities on chain. And that's radically changed over the last 12 months. And you played a big role. So I just want to get maybe your initial take over like what's happened over the last 12 months and why we went from like institutional skepticism to institutional adoption.
Yeah, no, definitely. And I think that's really well said. It's been, just to take a little bit of a step back, it's been a total journey. So I've been at Gemini myself personally for just about 8 years. So I joined when institutional crypto was still really in its infancy. And in leading the institutional BD team here and covering, client strategy and user acquisition and overall account management, you're exactly right. We've seen this shift in the institutional rhetoric. And really this year has been kind of this breakthrough year. So it's been really exciting. I think there's, a few pieces to highlight. Generally speaking, I would say crypto has transitioned from more of this venture bet to actual portfolio component, right? That people believe in. And I always say this to my clients and in conversations like this, the question really has shifted this year from should we invest in this asset class to how should we invest in this asset class? And I think that really does a good job to paint the picture of what institutional grade investors are thinking about. And so to dive into that a little bit more, exactly as you mentioned, you're seeing the rise of ETFs, whether that's Bitcoin, Ethereum, now Solana, right? That's bringing this standardization, this structure that institutional investors are more accustomed to. It's an easier access point into kind of traditional portfolios for the digital asset itself. You're seeing a lot on the regulatory front. So obviously here in the US, we've seen the Genius Act that got passed. So both at the federal and state level, right? People are getting involved. This conversation is a hot topic for sure. And I think generally that's just been a trickle down, right? Once there's kind of risk and regulatory stability and conversation happening, the institutions very quickly follow in terms of actions that they take.
Totally. So I want to unpack those because each one of those I think were like milestone moments for the industry. And a lot of what we spend time on this pod doing is maybe giving an inside view of what's actually happening behind the scenes to educate folks. And so how did the ETF sort of adoption happen? Because that was this watershed moment a year ago. And I'm curious kind of like from your lens, because you guys were quite involved in maybe like helping really orange pill these institutions that could house the ETF. So like, what was the moment like? Why did that matter? Why do funds basically need to, potentially use the ETFs where they can't all just, self-custody? Like, so maybe let's like talk about that first.
Yeah, definitely. So I think I assume most are familiar, but for those that aren't, right, a crypto ETF is an exchange traded fund that tracks the specific currency. So whether it's Bitcoin, Ethereum, Solana, I'm sure we will continue to see more, but it's tracking directly towards the asset, towards the pricing, but it's made available on a traditional stock exchange. So it's not necessarily something that you're buying directly through an exchange like Gemini, but it is something that is backed or in partnership and utilizing Gemini and the infrastructure that we've built. So, exactly as you mentioned, Gemini's played a really key role in crypto ETFs, particularly on the custody front. So, what that means is Gemini is a custodian. On the back end, we are holding the underlying assets that are part of that ETF. I think generally what that actually highlights is the need for regulatory compliance, trust, infrastructure that's well built for exactly this. So, Gemini's obviously pride ourselves on kind of this being our bread and butter from day one, but having this custody infrastructure, having the security measures in place, having all of that is really, how we've won a lot of these deals and how we are serving as a custodian for a lot of these ETFs today.
Yeah, and I think maybe the subtlety there is, for as much as many of us are sort of the decentralized open finance people that are sort of maybe trying to open and democratize the financial services. Uh, the institutions play an important role, and the reality is a lot of them have fund structures, so they can't just buy Bitcoin maybe in an open exchange. Like their fund structure requires them to be able to use something like an ETF, right? So that's the reason why the ETF might be a wrapper for these larger institutional funds, even though the ETF is actually working with someone like you. Is that a fair kind
Totally.
of view?
That's a totally fair view. You're exactly right. I think what I would add on to that is just like they have a requirement to work and have those assets within an ETF structure, the ETF issuers themselves have the requirements to work with a regulated entity like Gemini, right? So checking off those boxes of SOC approvals, being a New York regulated trust company, having that regulation by the Department of Financial Services, having insurance policies, those are additional framework check boxes that the issuer themselves then need to meet. So it's a little bit of a domino effect across the board, but you're 100% correct.
Yeah, and speaking as a regulated entity that has to do all that SOC stuff,
Yeah.
those are important for the financial institutions to have the right kind of compliance. They're not fun, but they also play an important role. So I enjoy our auditors so much. I
Love
really
us.
enjoy.
Love them so much.
But I think maybe on like that side, so there's like the institutional side, but then for a little bit of our like cypherpunk side, I would say maybe on the audit in the institutional and the ETF side, maybe to touch on a myth. There's a view in the community that like those ETFs aren't actually backed one to one, or they're not sort of institutionally housed in something like Gemini.
Mhm.
Um, can you either dispel that myth, or like where does that come from? Because there is this kind of view that um, maybe doesn't understand that the ETFs actually like legally are required to work with someone like you, and then you're like legally required to do proof of reserves and audits and that sort of thing. But meanwhile, it's the internet would probably go, well, is this all just an empty bank account somewhere? Um,
Yeah. So, I think I can somewhat speak to kind of where Gemini Fund Services, as we call it, sits in the ETF world. Um, Again, kind of serving as that regulated and approved custodian and clearing and settlement platform. Um, we really designed that so that crypto ETFs and other funds could utilize us because of these boxes that were being checked off. Um, Generally speaking, right, there's industry standards in terms of compliance and regulation. I think understanding that an entity like Gemini meets those standards that have been laid out is really what we're focused on and looking at. Assets that are custodied at Gemini Trust Company are held in segregated sole benefit, fully backed one-to-one storage. So that is what we pride ourselves on. And that's kind of all I can say to prove exactly how those assets are being held.
yeah, that's important. I think the
Yeah,
like lead up.
absolutely.
Yeah. So I know you can't speak for the entire industry, but I
Yeah.
think like it's important as a, I think critical pillar of the industry. You guys have prided yourself on one-to-one backing. Cold storage
Yep.
is the way to sort of maintain, I
Yeah.
think good standing. And so, I actually wasn't intending to get like hot and spicy already, but since we were talking about so okay, so like the ETFs have played a big role. They're now like I don't know off the top of my head, I don't actually know the stat lately, but like, the institutional coverage in general is now a meaningful percentage of ownership of something like Bitcoin. So I think it helps absorb some of the volatility in general. These are generally long-term holders. And so like what's kind of your view on just now their entrance into the space? What does it mean when, these large funds are now holding for generally long term on the behalf of pensions and others? Like, how does that shape the space now that was generally retail before? And, cypherpunks and freedom money, like what's your kind of view on the just ownership percentage and like, how does that affect the space?
Yeah, definitely. So I don't know exact numbers myself either, but I know we're, over 100 billion in assets that are in ETF circulation today, which is pretty
Yeah.
huge given they've only been around a couple years now, right? And
Right.
so I think generally speaking, right, kind of a few components going on. I see a lot of the ETFs, whether it be the institutional requirement to hold in that structure or the retail and institutional desire to kind of get your toes wet in that structure. So it really is an access point. It's that familiarity. It's a little bit of exposure, but not fully, leaning in, if that's what we want to say. So I really see it as a positive impact to have this much in circulation in the ETFs really opens up everyone's eyes and the larger opportunity to invest directly in the asset class. I think generally speaking, looking at more strategic reasons for a longer term hold, there's the common hedge against inflation, what's kind of going on socioeconomic, politically around the world that people want to bet against. And I think generally speaking, traditional equities fluctuate. We're trying to sort out, is there a direct correlation? Is there not? So you're seeing a lot of that in terms of portfolio allocation and some of these strategies that have come out regarding longer term holds.
Yeah. And what is the reason why an institution might start thinking about their portfolio strategy? Is it because they're diversifying? Is it because, they're trying to maybe get a little bit of alpha in the portfolio? Is it because there's geopolitical risk? Like, what are the common things when you talk to these large institutions or sovereign wealth funds or other folks that, quite frankly, most people, even if they're business leaders, don't, spend all day talking to?
Yeah, it is definitely varies depending on kind of the type of institutional investor. I would say typically, right, you're seeing corporate entities that are utilizing stable coins most commonly for treasury purposes. So there's efficiency in terms of the rails and 24/7 settlement and all of the good things that come with digital assets and the blockchain infrastructure. So that's definitely more on the corporate side of things. You have your family offices making long-term kind of hold strategies, still typically seeing that more in our top volume assets. So the Bitcoin, Ethereum, the more mainstream assets. So that's more of a strategic allocation, exactly as you're pointing to, Jeremy. That's kind of a small percentage to just get into the diversified alt asset grouping that they might already have. You've got trading firms, whether they're crypto native or traditional, that are more involved in the space. They're increasing activity, across global liquidity venues. I think highlighting again, trading, timing, all that good stuff that we love about this space. And then you've got asset managers. Asset managers and RIAs are really, really picking up in the space. I think there again, we're seeing a diversification play. So allocating a small percentage of their end client portfolios or kind of their general portfolio into the asset as well. That seems to be more of a hedge. Um,
Yeah.
so it differentiates across the board.
Yeah, one of the things I observed, but you have more kind of retail view of this and
Mhm.
institutional view. It's like even, the enterprises we work with or the other like family offices that I spend time with, even their allocation starts off very small. And then a couple things happen, right? It was, at least in Bitcoin, if it's a store of value in, over time, relative to their other portfolio, it might grow, right? So it's this interesting portfolio dynamics mix where something might start off extremely small, like sub 1%.
Yep.
Um, and then over time, whether because people have more conviction or just relative to the rest of the portfolio, it's outperforming, it actually becomes a more meaningful percentage. I've seen that everything from, here we pay our staff in Bitcoin. And so that you could see their own salary kind of like switch, or, you see investment managers that ends up happening, or corporate treasury where they're like, oh, we're going to touch a little tiny piece. And then all of a sudden it actually like starts showing up on their balance sheet reports. So like, is that, is that a view you see yourself, or am I like kind of in this, sort of maxi bubble?
Yeah, no, definitely seeing that on our end as well. I would say particularly, right, you're seeing it with a lot of the investment advisors who have, some sort of quarterly rebalance strategy or whatever it may be for that portfolio generation originally. And then as the outcomes continue to progress, we're seeing more go into that. I would say what's also interesting is we also see it in the nonprofit space. So there's more and more nonprofit involvement in digital assets, both from a donation side as well as a longer term commitment. And so it's been really interesting over the years to see some of these organizations that made small investments based off of donations, in a Bitcoin or an internal decision to allocate into the asset class that have seen such great growth over the years that they've continued to increase that.
Yeah, that's interesting. I wasn't even thinking about that, but that, another kind of my other non-day job thing is work on our own foundation. And one of the things we see there, and even in the smaller programs we'll support, it almost creates this endowment model where it's like, we might, contribute a grant that might be done in Bitcoin, and then that might go to a program, and then that program actually can run off of the grant longer term.
Yep.
Because they're paying the bills in fiat, but then they're storing it, in the original grant. And so that actually looks like these long-term endowments that honestly only the largest nonprofits could do for forever. And now it almost sort of democratizes a bit of that endowment type of funding model, which is really interesting.
Yeah, that structure is accessible for everyone, right? So
Yeah.
you don't have to have this large amount of endowment to start with. You can have a really small portion thereof. And of course, really getting into the weeds of crypto, depending on what assets it's in, it can earn yield on its own, right? And there's kind of certain plays you can make there as well, which is really interesting.
Yeah. So the other thing I think that the nonprofit side has kind of gotten me into is then on the other end of the spectrum, unintentionally, I end up spending more time in the governments and policymakers because of our foundation work, which is very strange and surprising. But also in a way, you guys have been pulled in the same thing, right? Like, so I want to talk a little bit about that. Maybe first, on just the institutional side, you guys probably are spending more time with sovereign wealth funds, right? Which are, oftentimes these investment funds that are coming from the government. So like, do those look like the institutions you're working with? Do they look differently? How are they thinking about it in your discussion with folks like that?
Yeah, so I think generally speaking, it's a similar conversation. What I would highlight most is licensing, gets kind of first and foremost as a topic discussed, whether that's US based and, as I mentioned, kind of having the DFS approvals and being a New York trust company or, the MiCA licensing out of Europe. So it all depends on kind of jurisdictionally where the basis starts from. But typically we go through kind of the regulatory checks and then start to build, on top of that with the infrastructure and actual product offering. But generally speaking, yeah, it's similar conversation points that are being highlighted.
Yeah, it kind of makes sense, right? Like, sovereign wealth funds might be one of the longest term sources of capital. And so, these folks need it to be, the most sort of regulated and I think it is directly connected as well to some of the policy making, clarity that we've seen, right? So it's like for folks like that, a sovereign wealth fund and policymakers are kind of directly connected, and so I want to maybe talk a little bit about, we were talking about the institutional adoption, but the other sort of watershed moment over the last 12 months has been, the change in policy,
Yeah.
and so can you describe like what's come about there? Because we had, first, at least in the US, well, actually, we'll start with maybe places like El Salvador and others that had sort of pro Bitcoin policies. Then, you had, particularly in the change of administration, pro executive order policies. And then, the Genius Act, and then, market structure and et cetera. So like, Gemini's and their founders especially played like a pretty big role in all of that. So like, what's kind of just the inside view as we went from like those of us who tried really, really hard to be doing the right thing, building great companies, but it was hard maybe 4 or 5 years ago. It was really unclear. And
Yep.
now all of a sudden, there's generally alignment. How did we get from there? We had to be really careful and cautious and hide in some cases, to now all of a sudden, it's kind of locked arms, at least with trying to have clear regulatory policy.
Yeah, so you're exactly right. Cameron, Tyler, Winklevoss have definitely been heavily involved since the beginning. I think, I was not a part of the company back in 2014, but they definitely chose to go the regulated route and really work with regulators and try to do everything, by the books and also pave the way for what is to be shaped in the regulatory space.
Well,
I think,
that said, I want to maybe pause because we were there early. They took a big bet early. Doing that was not easy. Like
no.
literally, I'm fairly sure, because I think it's public. You guys were debanked quite a few times. So like trying to stay with the like within the regulatory policy. Meanwhile, while you're like actively being iced out, is actually quite difficult.
Yes, definitely has not been an easy route, but something that we've stuck with. And I think over the years, it's looked different, right? I think it was back in 2019, the VCA, the Virtual Commodity Association, was something that we obviously supported and helped put together. And so that was more a self-regulating body. You've obviously, as you mentioned, we've had a lot in the US this year, the Genius Act, strategic Bitcoin reserves. So the rhetoric is changing. As individuals, Cameron and Tyler are definitely heavily involved in kind of the DC scene and the general conversations going. I think that holds true for a lot of our competitors as well, right? Everyone's really come together to provide education and influence in this structure that's being put in place, which I think is really helpful. We historically didn't have that relationship. It kind of was a I say no, and that's that. And now it seems to be much more of an open conversation, much more positive, and trying to expand upon existing restrictions and enforce them in a way that makes more sense.
Totally. And then what is that like? How do you see that trickling down or around the world? Because the other thing that's been fascinating is I, spend time in other parts of the world. Um, the US still leads, at least that's the goal, right? And so as I interact with policymakers and other folks around the world, I think there's a lot of questions around like, well, what is the right structure for us? Like, is it the US model? Is it the El Salvadorian model? Is it like, where does it live? So like, what's the dialogue you're hearing? Because those are deeply entwined with institutions and family offices in other countries and sovereign wealth funds in other countries that maybe are a few years behind where the US got and a few years behind where El Salvador's got. But now
Mhm.
everybody's actually looking
Yeah.
at the space, right? So
Yeah, I think, it really is dependent on kind of country and infrastructure and
oh,
and just generally how they historically have played a role in the financial ecosystem on a global scale. When you see an El Salvador leaning fully in and being the first to adopt Bitcoin as legal tender, we've obviously seen some other countries follow suit. I don't think we will see that across some of the more major metropolitan, countries and cities that we're all familiar with.
no.
But that's my personal view. Maybe in the future, I think the reality, right, is regulation does need to play a role. And that's why you're seeing, the MiCA framework, same thing out of Canada, here in the US as well. And so I do think that will continue. And I think us, having influence over it and being highly involved is a positive.
Yeah, I guess the one question maybe I have on the I hope you're wrong, by the way, but we'll see. Uh, I guess maybe one of the risks, if we take kind of your view that the regulatory side is the driver
Mhm.
in sort of adoption in the country, um, I think in TradFi you see regulatory capture become this problem where it stifles innovation, right? So like you have these cartels that, own, whether it's in Wall Street or the payment companies or the largest banks or whatever. And so I guess my question is like, I very much applaud what you guys have done to sort of lead the way in a trusted institutional grade company. But like, how do you think about the other side of like trying to make sure that we continue to innovate in the space, that we have great companies built in the space? Like, is there any risk that regulatory capture like only makes two or three companies really good and then we're just back to Wall Street again?
Yeah, I think that's a very fair point to bring up. I hope that's not the case. I see it more as, you know, obviously the currencies themselves are not government controlled. I see kind of government influence being a major factor, but hopefully not as much of a restriction. I think generally speaking, I personally kind of enjoy some sort of guardrails from a direction standpoint, but not walls that create barriers. So that would be my general global hope. I don't know what that will look like, but I would hope that it's more of an influential marker than it is a restriction, right? Because at the end of the day, this entire asset class is really about access and what it can do and the impact that it can have. And so I think understanding that and continuing to remind us that that's at the core of what a Bitcoin and what digital assets and this infrastructure really stand for is important.
100%. Yeah. And, I think maybe the model I'm a big believer in is like, the internet had to get regulated in some way, right? Like there
Mhm.
was an initial investment from the government, et cetera. But generally those guardrails were quite wide, but they were clear, right? And so, I hope that kind of innovation, because, the internet has now onboarded the entire world.
Yeah.
From the person in Africa to the big institutional company. So I hope we do the same thing. I want to turn to like the actual use, right? Like, so what do institutions that you work with, what do they actually need? Because I'm guessing they're not just storing their keys on a self-custody wallet, under their mattress, right? So like, what is an institution actually using you to do?
Yeah, no, very good points. Listen, some are still doing that. I would say it's more at the retail level. Um, but generally speaking, I would categorize it as kind of a buy, sell, store, and use
Okay.
of the assets. Generally speaking, an institution is coming to Gemini for, not to beat this in, but again, that regulatory clarity, strong compliance, strong risk and security infrastructure. That's base level. Then they're operating on our spot exchange. So that ability to buy and sell and transact in the asset class. We're operating with Gemini as a qualified custodian and our segregated custody product to hold those assets offline in cold storage for longer term. And then they're actually looking for more liquidity access. So we've got a full OTC desk. We've got an electronic OTC platform as well that allows for different trading infrastructures, whether it be algorithmically or via voice. So really looking to have kind of high touch home base where you can do everything with this asset.
Yeah, maybe I want to kind of dive into that because
Mhm.
some of the requirements are not obvious, maybe for somebody who's just, a retailer user. But like if you're a company or you're a big institution, you need multiple people in your organization to be able to sign off on where it gets stored, when it might get moved, et cetera, right? Like the things like approval workflow, sign off, audits, like companies like us or, an institution or family office, like they actually have to do that. Like as much as you might be, a completely like freedom maxi, like if you're an institution, like you actually can't hold it unless you have some of these controls in place, right? So like those kinds of controls could include everything from like, hey, it needs to be in cold storage, or, here's the audit records, or here is the approval flow, or here's what happens if an employee leaves, and here's how you can switch out the keys. Like those are like the practical requirements, right, that a lot of the institutions have.
Yeah, definitely. So there's unique parameters, depending on institution type, whether that be at, the individual access point level of who on the team can sign off on what, whether it needs to be, duly signed off on so you can initiate something and I can approve it. So yeah, there's a lot of customizations that have to go into some of these institutional accounts. I think At the base level, you're exactly right. It's checking the boxes from a regulatory standpoint. It's making sure from, an RFI and security check standpoint, meeting those regards. Definitely on a reporting level, making sure that from, the reporting requirements, they're getting everything that they need. So full transaction history data, all of that stuff that can be used for taxes and general reporting on, balance sheets or whatever else is needed for that institution is something that Gemini provides access to. So at the base level, right, it's kind of checking all those boxes and building this framework. And then it becomes about customization. Who needs to touch what, where, what kind of controls need to be in place? Are assets, held in an exchange account? Are they held offline? For what amount of time? How does that get released? What does trading look like? So there's a lot that can go into it. But I think generally speaking, I would categorize it between storage, liquidity tools, and general, regulatory compliance security checks.
Totally. They might be seem very in the weeds, but they're like absolute requirements for a CIO or CFO or et cetera. So
Definitely. And
100%.
also, I mean, I think you guys have experienced this too, but having some sort of high touch relationship as well,
Yeah.
actually knowing and having a human relationship with someone at the company and being able to have that resource seems to be very important as well, whether it's, a written requirement or not.
Yeah. And I think at least speaking on what we see, you also, you kind of want to diversify where, your own holdings are for a lot of reasons, right? For security reasons, for operational reasons. So you may choose like, okay, well, we have custody with these providers. We're very high touch. Here's going to be in cold storage. Here's going to be sort of the audit record. Like, managing all of that as the numbers get bigger become really, really important because, I think CFO's job oftentimes is to, minimize risk on their cash and their balance sheet. So it's great, for these assets that are appreciating, but it's a very big problem if there's risk associated. So, I think a lot of the CIOs and CFOs are actually, a big part of it is just minimizing risk to make it so that they can hold and, be involved in the space is a lot of what we've experienced. So,
Yeah,
um,
definitely.
so, I think that's, the institutional side is really interesting, but I also, and Gemini holds two sides of the business, right?
Yep.
And you've also been really innovative in other products that I think are really cool that are, sort of near my heart as we see more, I would say, mainstream adoption, which I'm a big believer. It's like important to bring everybody into this asset class. Like you want to bring everything from the institutions to the people, that are everyday users, because that I think changes the story around like, this is just speculation to this is actually useful in the real world. And so one of the cool, I think, products you guys have done that we're really early on, that we've now spent a little bit of time on the corporate side around, but is the Gemini card. So like, how did you think about that? Because even that again is like, that's a Visa card, but then like, the some of the view in this space is like to disrupt it, but then you've actually managed to kind of like connect the two worlds. So tell me about a little bit about like, spending dollars and earn sats and kind of like how did that come together and how do you guys see that strategically?
Yeah, definitely. It has been really exciting. So you're exactly right. We, have seen that the Gemini credit card is really mainstream on-ramp, right? How to
Mhm.
get individuals involved in this asset class. And so the credit card on our fund is really the first of its kind. It works in terms of instant rewards on a MasterCard credit card. So you are able to spend and use that credit card as you normally would to pay for your gas, buy dinner with friends, and be able to earn Bitcoin or any of the other assets we support on that everyday spending. So I think generally speaking, right, it's reinforcing existing behavior, but allowing you to automatically get exposure into this asset class. So,
Totally.
a high performing asset class that you don't need to buy directly, you can just function as you normally would is pretty exciting. And it's an amazing business for us. There's no annual fee, there's such low barrier to entry because of that. And so it's been really exciting to see just this real life example of how crypto can actually be embedded into legacy financial systems and also human legacy behaviors, right? Like it's super simple, it's regulated, it's consumer friendly, and you're getting crypto. How awesome.
It is really cool. I'm actually curious. I want to talk about the use cases in a minute, but I'm now like the curiosity in me is I know the inside baseball on our side when we were sort of like touching it on the corporate side and the discussions we had with the traditional financial institutions. What was it like to convince some of these folks? Because the reality is, you do have to actually interact with an issuing bank, and you do have to interact with the card networks to make that work. So, what was it like to walk in and be like, "Hey guys, we want to run on your rails, but we actually want to like secretly Trojan horse onboard people to Bitcoin with it." Like, how did
Yeah.
those initial conversations go, and like, how did you get there? Because it was a very innovative product when it launched.
Yeah, definitely. To be quite frank, it was really well received. I think generally, we've seen really positive crypto conversations out of MasterCard. I think at the banking rail level, there was more education and convincing maybe to do, but now it's really proven itself, over time. So those conversations have become very easy. I think there was that first look like, hey, what are you thinking here? And now it's like, wait, hold on, we want to do more. And everyone's doing it, right? And we're seeing the growth in this space as well. So, like anything, you've got to be the first mover, and there's some hesitation around that. But once you get people on board, they're usually pretty grateful.
Imagine, I think you're being very generous right now. Or maybe not. Maybe you guys had easier. I would say it was. If I look back a few years, that
Mhm.
the original orange pilling conversations were not easy with some of the TradFi institutions. Um, there was a lot of skepticism, at least
Yeah.
on our side when we did that conversation. I would say what's so interesting to me though is now I look back, in maybe the momentum of the institutional adoption, the sort of policy clarity, and now I would say it's a 180-degree turn. So
Fair.
maybe for you it was like this slide up to I would
Yeah,
say on
no,
our
kind of
side
it's
what I saw
setting.
was
Yeah.
yeah, yeah, yeah,
Yeah,
yeah,
no,
and
I think that's fair though, because right, just seeing the amount of growth we've seen in the traditional payment space, and credit card space into digital assets now, right? You obviously are deeply familiar with that in detail, but I agree, it's a 180. I think there was openness to our approach, so we were met with some excitement, but it's definitely gotten easier. That is totally.
Yeah, what I would say is, no matter what, the thing that's massively changed, if I'm at some TradFi big fintech event or whatever, a couple of years ago, this was at most kind of a fringe conversation, and now I would say it is like the number one topic of every financial institution is products like this.
Mhm.
That is a wild shift. So like even if you had one or two earlier adopters on the FIs like that were partnering with you, I would say the big thing to me is now you've crossed the chasm where like all of the FIs are really that are at least trying to like be on the offense are looking for what their strategies are in the space. So that's really cool. So it's super
Yeah.
cool. Um, and then I think like another thing is so there's the card, which is super innovative, and that's like a really easy mainstream product. Quite honestly, everybody should have one. Like um uh there are other main kind of products you guys are working on that also are kind of more unique innovations. And so like I think yield is one that you've spent kind of time saying like, how can this be a mainstream product? How can we do it safely, et cetera? So can you kind of describe what you guys are thinking about around yield, which is like a very in the weeds DeFi world thing, but less like mainstream, but you're probably trying to bring it more to the mainstream. So
Yeah, exactly. So it definitely has historically been less mainstream, been protocol native, chain, based yields, and have a lot of DeFi kind of understanding around it. What Gemini is trying to do is bring, particularly staking capabilities and some of these naturally baked into on-chain infrastructures to our general retail investors. So you can move some of your assets, whether they are to be staked or not, at Gemini into that product offering. It's pretty base level right now. We are definitely going to continue to expand upon it in terms of what assets can be used and other ways you can then use and earn from those staked assets. But I think generally speaking, thinking about kind of a Bitcoin, Ethereum, Solana, those markets have matured staking yields really justify those allocations. So, like we've been talking about, institutions and retail investors who are holding these assets, let's have them earn something. Why are they just sitting there? Let's do more with it. Maybe we don't have an active trading strategy, but we can park some of these assets in a yield bearing strategy instead, whether, naturally staked or not. So, I think we're seeing a lot there, on the stable coin front as well, a lot with these treasury companies. That's kind of been a hot topic recently. So going to continue to expand on that on the Gemini front, but it's definitely something that we are interested in and focused on right now.
I kind of want to break it down a little bit because it is maybe mysterious,
Um,
and either some people are skeptical from kind of like the past history, and other people are like, well, where does this come from? Like this, is it magic internet money yield? Like so when we talk about earning interest, like um can you just describe like where that comes from in these products? So and how it works. So if you're going to get, I don't know, 3, 4, 5, 7, 8, 10% back, like, is that a banking model where, you're lending it out and the banks are, earning model on fractional, like, deposits? Like what's going on for a normal person to understand where that money's coming from?
Yeah. So there are a few different models or kind of setups that it can work in, right? First and foremost are going to be proof of stake networks. So those are staking rewards that are actually coming from the blockchain themselves when new tokens are created as block rewards. I want to keep it
Hmm.
super high level. So please let me know if going too in depth. So essentially, transaction fees are paid by networks, so users can then receive those distributed rewards. So first and foremost, I would say it's proof of stake networks. It's kind of built into the network, right? This is how it was made. The second would be more of a lending or
So
borrow.
let me pause on
Yep.
that. So
Yep.
just like, so if something's running on a smart contract on Ethereum,
Yes.
and the network is decentralized,
Hmm.
and to incentivize sort of computers to run that network, Bitcoin might be running miners to be able to validate the transactions and earn fees. And in this case, on a smart contract network, a proof of stake network might actually just distribute those fees to participants in the form of yield. Is
Correct.
that okay?
Well said. Thank you. So that generation, right, of that yield as incentive, but coming from the network itself.
Okay.
And then I would say separate from that, right, is your lending, borrowing platforms. So that's where
Mm-hmm.
you've got interest being paid out directly. So there's some sort of deposit of tokens coming in and interest being paid on those loans, typical to, kind of a general understanding of the lending industry, right? And how
Yep.
that works. So the yield being a portion of that actual interest coming from the borrower. I think there again, right? It's dependent on asset. If we're talking about an Aave or something like that, you want to expand, Jeremy, please do. But I would say separate category is the actual platform.
Yeah, and I guess maybe the question people would have there is, um, in a bank model that's doing that, or a
Mhm.
lender model, they're managing the lending risk, right? And so, when you're putting your deposits in one of the top 5 banks or whatever, it's got institutional backing from the government, and so, um, how should someone think about that category? Because like a DeFi lending network, like I think it's pretty mysterious to people how you might manage risk, and is the loan being like a good loan, a bad loan, who's managing it, like so how should somebody think about that category if they were looking at yield and earn on something like that?
It's definitely risky for sure, Jeremy. I think there are a lot of lessons that have been learned over the past couple of years, particularly in this space and on the lending and borrowing front. So, generally speaking, there's a lot of due diligence that has to go into selected partners and operations that you're choosing to work with.
Yeah. So the summary in that one is like, that's a high trust, be very careful, kind of model. Maybe it makes sense in the most trusted capacity, but is a very different capacity than the staking side, which is a totally different yield model. And then so we've got staking, we've got kind of lending as another model, very different, and
Hmm.
then there's a third one.
Yeah, I would categorize the third one to be kind of yields-based DeFi strategies, right? So when you've got staked, um, assets themselves, they're wrapped in that staked infrastructure. So protocols that have built in this, so to attract, quite frankly, liquidity early on, and have those rewards built in, something like a staked ETH, right? Wrapping that Ethereum-based token in a staked infrastructure to have that staking yields and be able to use it for lending purposes.
Okay, wait. So we're getting into like some Wall
I
Street shit
know.
when you're
That's
like wrapping things and then you're like, synthetic derivatives. So like I would say that third category, there is an entire like DeFi native set of companies and people and protocol developers that are kind of thinking about synthetic wrappers that are almost like this decentralized Wall Street set of ways to be able to
here.
earn and farm where money makes money.
Yep.
And, I think my own point of view of that is you really do need to be kind of in the inside baseball if you want to play in that game. There is certainly a whole subset of companies and entrepreneurs who are making money that way. But sort of do your own research, DYOR or whatever, on that, because it is complicated and there's money to be made, but realize the game you're playing. And so, but going back maybe to the traditional institutional grade products, like there are really cool ways that you can, sort of earn yield that have traditionally been, maybe the way I would describe it is, especially in bucket one and things like bucket one, whether it's stable coins or whether it's staking networks, those are products that like really only FIs and banks could earn sort of long-term yield before. And so even if you take out the more complicated, more risky things that I think, do your own research around. Speaking of, I think risk mitigating while still innovating, right?
Mm-hmm.
I think just building a company in the space is that way, right? Like,
Sure.
how do you last through all of these ups and downs, mitigate risk while still innovating? Because we're in early days. Like the transformation of money, like is a historic thing that people will look back and we're like, wow, like Paget, Jeremy, you lived through that. That's crazy. And you built a company through that. That's crazy. Like,
Yeah.
and so like, I would kind of like to end just a little bit on, the own journey for you and the company going from a startup, just trying to survive, quite honestly, to, you guys had an IPO somewhat recently. You're now, at a different, stage in company building where, I think you're a little bit now the elder statesman, in the industry. So take me through that journey of just building a company in that space, because my belief is company building as they become successful, we all want to make thousands of other entrepreneurs that go do more of that. So like if you're an entrepreneur in this space, how should we look at the ride of Gemini and like what are the lessons learned?
Yeah, definitely. I have been here for quite some time and it's dog years in this space for sure, but it
Right.
is still early, right? So I can speak to my experience. I think what I also want to highlight is that kind of those two biggest gaps of due diligence and education still remain, right? And
Mm.
they look different year to year, but I think generally speaking, Gemini and a lot of the early players have done a great job to try to fill in both of those gaps simultaneously. There's something to be said about being a crypto native company and also doing all the due diligence on the traditional or regulatory side of things. So I just wanted to highlight that kind of as to what you were speaking to earlier when thinking about Gemini. Specifically, yes, it's been a really exciting year. We just IPO'd in September. That was obviously years and years in the making and something pretty incredible to be a part of. I think generally speaking, right, that IPO really is just a similarity of the maturity that our company itself has gotten to, but also the wider industry. Yes, it's still early, but we've made a lot of headway. So I don't want that to be discounted, because public markets are starting to pay more and more attention. We're seeing more IPOs in the digital asset space. So there's a lot of, you know, transparency, long-term trust, education that's being built in to this process as well. Generally speaking, though, I would say the Gemini timeline has really been focused on longevity. This was never a quick win play at all. It has always been about kind of taking the slower approach, getting approvals, asking for permission first, before going in and building things. And so that institutional grade kind of long-term centennial company has been at the mind of all of us since the beginning. When I think about kind of, the early 2017 boom and regulatory foundation that came from that, then you look at 2019, winter, a lot of infrastructure going on, a lot of discipline there. 2020 into 2021, I mean, so much fun, huge boom, crazy, starting to be more mainstream. And that was quickly followed by, a reset, right? And what it meant to have kind of overall risk and things be challenged. And now, 2025, a lot more mainstream, obviously seeing the regulatory shift and so on. So I think generally, right, operating through all of this volatility on the Gemini front has just strengthened the ethos that we started on. Risk management, product rigor, be highly regulated, focus on custody compliance and the trading infrastructure that people want to actually use the asset. So I know there's a lot there. I'm obviously very proud to be a part of it. It's such an ever-changing industry, as you know. So I'm sure in a couple of months, things will be different. It's so fast-paced. We're always moving. But I think generally speaking, we've matured so much, but that core is still the same.
Yeah, and I love that because I'm a big believer. Companies that have like meaningful impact on the world are built to be durable, and it's a really actually hard thing when you're innovating and you want to push fast, but durability, like, I think we see what's happened in this market, and quite honestly, this has happened in the .com days. It's happened in lots of times where people want to do these fast things, and it's extra tempting in industries that have a lot of capital around them to do them. But really, the ones that I really respect and I think that have the biggest impact on the world are durable in the long run. They're built that way. They sort of built it into their culture. And so it allows you to sort of make measured improvements every day, every month, every quarter, every year. And then you can look back and say, look at all the progress we've done since you joined 7-8 years ago, and now where we're at, right?
Exactly.
And I think my kind of final thought on that is just like, people probably like ask you, like they ask me all the time, like, what's the price or whatever. And I just kind of like, I've gotten to the point where I'm just like, I don't mean this glibly. I just don't care about the price, because what I care about is like the more builders that we have in the space and the more like people that adopt and use it, like if that number keeps going up, like everything else falls from that. So like, I really love this like stuff you guys have been doing, which is building, products and services that everyone can use, whether it's on the retail side with the card or whether it's, on the institutional side, because the more people who are using it and have it in their hands and have useful reasons for it, like that kind of adoption is hard to stop. And the rest, the economics kind of follow behind that in my view. So.
No, totally agree. I think we've done a really good job to build credibility, but also build community. And I agree, kind of focusing on those two pieces, price and overall market interaction, right? Hopefully follows suit if you've got that structure.
Yeah, totally. So I've loved the chat with you, Paget. This has been wonderful. Like if people want to find out more, like just to follow your work or to find out about the company, like where do they go?
Yeah. So can check us out across all socials at Gemini and at Gemini Institutional. Can access us via email the same way, institutional at Gemini. I would say you can email me directly. It's just my name, but please be sparing with that as well. Always happy to have conversations, educate, and get more people involved in the space. But yeah, generally accessible across social platforms and email.
Awesome. Well, I've loved the time with you. This has been awesome. Thank you for being here. And guys, you can find us at all the places these pods are: YouTube, Spotify, Apple. I don't know where your famous followers are, but we'll be there. You'll get more awesome combinations like with Paget. Like and subscribe, and we'll talk to you soon. Cheers, guys.
Thank you.